Joining me today on Zeal TV is Nathan Field, the portfolio manager for the Thematic Fund at Generate. Good to have you with us this morning, Nathan.
Thanks, Ken.
Now, tell us a little bit about you. So, you prior to joining Generate, I hear that they were trying to get you on board for a few years, but you know, when you've got a thematic fund at Kiwi Wealth, you're probably trying to stick to your record because it's your baby. When Fisher
Mhm.
Funds bought out Kiwi Wealth, they had too many fund managers, and you thought, hey, let's see if this opportunity is still on the table. You've been at Generate for what? How many years?
Just over 3 years.
Wow! And tell us about a little bit about your background, and then we'll kind of cover off what a thematic fund is.
Sure. So I started on the sell side, as they say. I was an equity analyst for a number of investment banks like Credit Suisse and ABN AMRO and Macquarie. Worked in Auckland and Sydney and London. Came back to New Zealand and moved to the other side, the buy side. Started working for Gareth Morgan Investments down in Wellington, um, doing global equities. That's when I started a thematic fund. And
Yes.
of course, Kiwi Bank bought Gareth Morgan, became Kiwi Wealth. I worked there for 13 years, running a thematic fund. Um, yeah, it was pretty successful. Then we got bought out by Fisher, as you say. I had been talking to Generate for a while, and they were fans of the strategy as well. So I decided to jump ship before I was pushed. Yeah.
Right. And tell me, so one of the reasons why I personally moved is I was in the focus growth for 10 years. It was like the highest risk, best return over the long term. When they launched these specialty funds to the KiwiSaver Generate clients, there was thematic, global, Australasian. I've had some clients that are risk takers want to split across the three. Some are all 100% global, some are 100% thematic. What would you say are the main differences between the three if you're just talking to the general public?
Well, it's kind of what it says on the tin almost. I mean, Aussie New Zealand, you're getting Aussie New Zealand exposure, and I can't really speak to what the return profile looks like in Aussie New Zealand because I don't really spend a lot of time looking at that fund, all those markets. The difference between global and thematic is probably not a huge difference. I mean, we both run portfolios of sort of between 40 and 60 stocks. I guess Global, which is run by Warwick in Seattle, he's a very good portfolio manager. He has a more value tilt than I do. Mine's probably more growth, but we end up in a lot of the same stocks.
Mm.
So, look, I think, both are great funds. You should be in both of them.
Now, like you say on the biscuit tin, thematic themes, you're looking for
Mm,
themes. Do the themes change? Because I remember a couple of years ago when I was at Generate listening to you on the panel, you were talking about Lululemon and how
mm,
COVID had changed the online space and how that was
mm.
popular. It looks like you're in a lot of tech now. So Nvidia, Facebook, and they are heavily weighted. I kind of say it's more concentrate than say the focus growth.
Mm.
Um, Obviously, you're backing these as winners.
Yeah, I mean, the things do change all the time, and global equities themes or good trends, positive trends, they get priced in so quickly. So,
Yeah.
when we see a trend, we've got to try and get it before the market does. And then when the market does get it, there's no sense hanging around in that theme when it's already priced in. So, we turn over the portfolio quite a bit, but we're always our philosophy is we don't want to miss out on a trend.
No.
If there's a trend that's driving positive earnings growth, we want to be there. And if we're there late, then we'll still be there late. So artificial intelligence is the big theme at the moment, but the themes with the stocks within that theme have changed quite a bit. It was Nvidia was pretty much the AI story in 2024, 25. But over the last year and a half, it's really shifted to other chip stocks, the memory chip stocks. They've been our best performer over the last 18 months. Nvidia has actually only really tracked the market over the last 18 months. It's really the AI story has expanded and broadened, and a lot of chip companies, power companies, companies involved in anything to do with building data centers. They can be construction companies, they can be distribution companies that move parts around. There's a lot of stocks out there that are being pulled into this AI tailwind. And so we've been shifting around trying to find stocks that haven't been, pushed up 100%. We're looking for the next wave, the next trend that's going to benefit from this AI boom, because that really is the mega trend of this decade.
Cool. And do you think you'll go into, Elon Musk and the SpaceX, like the Starlink and all that kind of thing? You'll go that way, you reckon?
Well, we've got a tiny, tiny holding in SpaceX, and it really is a AI stock now. I mean, he's bought his AI company has rolled up into SpaceX. The value in that stock really is the AI angle at the moment. It is a very expensive stock, so it's not going to be a big part of our portfolio for the foreseeable future. We'll wait and see. But there's that old saying, "Don't bet against Elon," and we don't want to bet against him in the sense that we don't want to not have a holding. But at these prices, it's going to be small.
What do you say to people that think it's a little bit of a bubble? I've had a couple of clients that are wanting to de-risk, and some of them work in that tech space industry, and they kind of see it as a bit of a I wouldn't say like crypto, but for them it's like a bit of a bubble, and they want to de-risk. What would you
Well, I
say to
would say
those
that
people?
it's nothing like crypto, because crypto is speculative, and it's only worth as much as the next person who wants to buy a Bitcoin off you, that you can't value it. AI is generating real returns. Nvidia's, what is it, $5 trillion market cap is built on real cash earnings. The amount of investment going into this space, it's real money, and we're seeing real benefits. So we don't think it's a bubble at all. We think that might have been sort of some speculation last year that it could be a bubble, but this year, with agentic AI taking off, I think that talk's kind of died down. Now, whether it's priced in or not is a question that we're constantly asking ourselves, but at the moment we don't think it is. And we go to America. Well, I go 3 times a year, and my analysts go. We're constantly hearing companies talk about what they're seeing in the space, and there's not a demand problem at the moment. There's just bottlenecks. People need more power. People need more memory chips. There's just supply bottlenecks everywhere because the demand is through the roof. So, yeah, we definitely don't think it's a bubble.
Great. Now, we're big on our industry on how past performance is not a reliable indicator of future performance, which in theory I do agree with. I also believe in someone's character and proven track record like yourself. One of the reasons why I did go thematic, and I heard not just, hey, it's Generate, but the man behind it, which is you. At Kiwi Wealth, what was your record there? And obviously, to the people watching, you don't just move because he's done it in the past, and it's not saying you're going to do that number again in the future.
Sure.
But was it around 14% after fees for over 10 years? Was that the track record?
I cannot remember the absolute number. I know that the number that gets quoted a lot is we were on average 4% per annum ahead of the global index.
Yes.
I'm not sure what that works out to in an absolute sense, but look, I think it's a fair comment. Past performance is no reflection, but often that's that is more poignant when you have a buy and hold strategy. So maybe you've owned some stocks that outperformed last year. That doesn't mean they'll outperform this year. We try and constantly turn the portfolio over to have winners every year. It doesn't always work out, but that's our aim, is to be in those sectors, in those industries, in those themes that are outperforming at any given time. So I think it's less relevant to our strategy because, we're constantly trying to beat the index. We're not just sitting back on last year's winners and hoping they'll do all the heavy lifting this year as well.
Cool. And just looking at the results, so these are to the end of May, and I saw that the focus growth, and obviously we don't go with the 1 year returns, we go with long term. That focus growth did 20.1 over the 1 year. Over the 10 years, it did 10.46. This is all after fees. I just saw the Morningstar promotion that Generator doing, saying that focus growth was number one in the aggressive category, which is great. And then but like every clients that I'm reviewing, they go, "Hey, I'm loving the focus growth," and then they have talked about these thematics and the global, and 29.77, 31.36. I mean, when it goes up, it sometimes comes down and corrects. When it's down, it comes back up. How likely, with it being like a really good, obviously last 12 months, if people were to come in now, like, do you think they might get a bit of a drop before it gets better, or it could keep maintaining status quo?
I have no idea, Ken. I mean,
get the crystal ball.
we all we try and do is beat the global index. So if the global index is down 20%, we're not going to be up 10%. We're not magicians. However, global equities have been a great place to be historically, and I would recommend any investor who has a 10-year or more time horizon to be invested in global equities. It's a really good way to go. If you're passive, it's a good way to go, and we're trying to be even better than passive. So, yeah, I mean, you're never going to get the timing exactly right. We had a dip earlier this year. We had a dip last year with, the Trump tariffs. The market came roaring back. We're going to get another dip. I don't know when that will be. But yeah, the market is remarkably adept at finding new ways to grow and giving money to the best companies. So
yeah,
it's always a good place to be.
That's great. And I kind of think too, with KiwiSaver, I always hark back to, it's not a, hey, give us this money and let's watch it and like a boat in the ocean with the waves. It's an active investment. You're putting in every week, fortnight, month, you get paid. When those dips come, you're buying in at the low. One of the things that convinced me too, my unit price was $3 something in the focus growth. You were starting out at $1. I knew you had this past track record, so it wasn't really a pump for me. I'm moving over all my money at the low. I think the focus growth at that point, this was May last year, made me 19,000 over 10 years. You've now, when the thematic fund made me 19,000 in 1 year, or just over a year. So real stoked with that. But obviously, when I explain that to people, that was the timing that would have come up in the focus growth. I just notched it up a level, 95% growth, went to 98. I noticed, so when we log in and you can see where you're investing, one of the ones I saw is Nintendo. This is just before I let you go, and I love Nintendo. Sure. What do you see there?
Oh, look, there's not many. I mean, as we know, gaming is a great industry. It's growing, and at the expense of things like TV and cinema, and there are very, very few investable gaming companies. There's Nintendo and there's Sony, basically. I mean, Microsoft has a gaming division, but it's such a small part of the company. It's not really a gaming stock. Nvidia used to be a gaming stock, actually, because they made the chips for gaming consoles. But
interesting.
We liked Nintendo. We thought it was actually perhaps a takeover target because it has such a big franchise and a lot of fanboys like yourself, Ken.
Yeah,
We owned it and then we sold it. We sold it because of memory chip prices, which are through the roof. I mean,
yes.
the cost of memory chips is up. I don't know the exact number. It's like 5x or 6x. And Nintendo, it's a big part of Nintendo's cost base. And you'll see that in the share price. The memory chips have eaten into their profits. So there'll be a time to buy Nintendo. I'm just not sure that's right now. We might buy it again in the future.
Awesome. Hey, thanks so much for joining us today. That's been really insightful. For anyone listening, this is not financial advice. We do recommend you talk to an advisor to get advice around what strategies best for you. As generic advice, that focused growth we generally recommend for 8 years or more. The thematic global Australasian 10 years or more. They are specialty funds, they're not for everyone. But if you have dipped your toes in the focus growth and you like how it's gone, you might want something a little bit more gruntier. And you plan on sticking around a while. I believe it would be like the thematic fund, as much as it generates, it's yours. You take ownership, it's your baby. You want to kind of stick around and prove a point and be there for another 10 years and hopefully have a good result that has bet the index funds.
Yeah, I mean, well, we've got a deep bench. We've got 3 global analysts now who are learning, the strategies, both global and thematic. But yeah, my money's in the Generate Thematic Fund. I'm a shareholder of Generate. I'm, not going anywhere.
Yeah, awesome. No, appreciate your time. I'll let you get back to managing those investments. And yeah.
Thanks, Ken.